So yesterday was a really odd day for the markets and no one really knows what to make of it. The big driving factor was of course the US jobs report, which came out with a strong jobs report, meaning a tight labor market, meaning that inflation is likely not at the end of its tenure. And the Federal Reserve is going to keep on tightening, keep on raising interest rates, and maybe actually finally starting to sell off their balance sheet. As you can see from the heat map behind me, there really wasn't just one major direction of moves, and on the whole, the S&P 500 fell by 0.1%, so really nothing major there. The Nasdaq rose very slightly by 0.1%, the Dow Jones fell by 0.1%, and then the Russell 2000 didn't really move at all. Across the rest of the world, it was a very similar situation as well, just not much movement in any real direction, no change in sentiment, no change in what investors are expecting. The rest of the Americas was slightly underwhelming, as was Europe and Asia, though China was down for the most part. The FTSE 100 rose by 0.1% and the Stoxx 600 actually rose by 0.5%, so a decent day there. In the world of foreign exchange, the dollar didn't really move much at all, though the euro did rise very slightly against it, creeping back up to that $1.02 mark. The pound is still sitting pretty at $1.20, and the Japanese yen is still sitting at 136 per US dollar. In the world of fixed income assets, we actually saw bond yields rise for the most part. The US 10-year Treasury yield rose by 9 basis points back above 3%, now at 3.08%. The German 10-year yield rose by 3 basis points and the British by 11 as well. So we saw a modest rout outside of fixed income assets and back into risk-on assets like the equity markets. Finally then, for commodity prices, we saw oil rise once more by about 2% for the day. WTI crude is at $105 a barrel right now, and Brent crude at $107. What we're really seeing here is the markets repricing how likely and how early this demand hit for oil is going to get as the worldwide recession begins. We are still a fair bit away from oil demand actually being dampened by this recession when it comes. And so I maintain that actually this reaction and the massive drop in prices by about $20 per barrel was a little bit unfounded, and the markets are now pricing this in. And then finally, for gold, we didn't really see much movement at all. Gold is still sitting at relatively low at $1,740 an ounce. In the world of crypto, we saw another modest gain for the day. Bitcoin up by about 1%, a fair bit above $21,000, encroaching in on $22,000. Ethereum is sitting above $1,200 now. Most altcoins for the day rose by 1% or 2%, but really nothing major. There really wasn't any huge piece of news driving this growth. There is a little bit to talk about regarding the crypto industry, but nothing that is massively positive, except for maybe some more regulation coming to stablecoins, which I think we can all agree is long overdue at this point. Now, what is the actual news that we got in the crypto industry? Well, blockchain.com, which is one of these massive crypto exchanges that was taking people's assets that they custodied with them and basically gambling on them, being long crypto. Well, they lent out $270 million to Three Arrows Capital, that gambling crypto firm, which is now in liquidation. And so they're going to eat a $270 million loss on that loan. The company itself is claiming that all is okay. They are still allowing withdrawals at this time, and they're claiming that they're nowhere near liquidation and that they can still pay out everyone, that there is no possibility of a bank run. But frankly, I doubt that, to be honest. I think we should all be very careful about where we custody our assets at this time, and cold storage is really the only safe option at this moment. We also saw Binance start a zero commission, no cost spot trading for Bitcoin, which basically means you can trade Bitcoin with literally no fees at all on Binance. Now, this is obviously going to be very popular for anyone who wants to trade Bitcoin because it is by far the cheapest you can find. And as a result of this, we saw some incredibly weird volume. Billions and billions of dollars more of Bitcoin was being traded every minute than we had ever seen before in history yesterday. And no one was really 100% sure what was going on. Some people believe it was some weird attempt to wash money, hide digital assets, to disguise them throughout so many transactions that it's just so inconvenient and difficult to track. Binance have come out and said that they think people were trying to game the system and become VIP customers by making a hell of a lot of trades, and so appearing to be some of the whales for Binance, which does also sound fairly plausible. Now, the really big news for the day was the US jobs report that we got out, and in short, it was a really strong report, which historically, or under usual circumstances would be a very good thing. We saw 372,000 brand new jobs in the American economy. We saw unemployment stay at record lows of 3.6%, and we saw wage growth continuing as well. Basically, the labor market is still incredibly tight. It's still really hard to find good employees. And if you're looking for a job, well, the timing has never really been better. What then is the bad stuff that we got out from this report? Well, labor force participation rate fell once more, which means that if you take 100 random Americans, fewer of them are working today than they were last month, which isn't a good thing. And we also saw the total number of active workers fall, which basically means the same thing. There are less actual employees in the economy, despite the fact that the unemployment rate hasn't changed, and despite the fact that there are more jobs in the economy than there were before. Now, where did these new jobs come from then? Well, it turns out that what we actually saw is a number of people, far more than usual, picking up second jobs, or some even third, in order to try and make ends meet. So that initial figure of 372,000 new jobs isn't necessarily as good as it might initially seem. Now, there are a bunch of problems here because it was still a fairly strong jobs report, but that isn't a good thing under these circumstances because that means that inflation probably isn't going to be slowing down quite yet. And that means that the Federal Reserve's tightening sequence is going to be continuing. We're seeing firms still continue to hire more employees. They hired more over the last month than they did the month before. And despite the fact that recession fears are very real, and I do think in the end they are going to come out to be 100% true, they aren't really backed by the data yet. What does this mean for the future? Well, the Federal Reserve is probably going to finally have to start quantitative tightening. We mentioned the other day how they claim that they're reducing the size of their balance sheet, but in reality, they put mortgage-backed securities up for sale and no one wants to buy them at the prices that the Fed was willing to part with them. We might finally see quantitative tightening take effect as that changes. We might be expecting another 75 basis point rate hike in the next month when the Fed makes that decision, or it might even go higher to 1%. We really don't know. That's going to depend on the CPI data that we get out coming here. But in short, I think this is bad for equities because it means that the Fed isn't done smashing investments. They're not done making the monetary environment tighter, and they're not done when it comes to crashing the economy to tame inflation. Now, out of Sri Lanka, we've had a lot of news recently, and in short, this is a massive story and it's far too long for me to cover everything in this video alone. It's also incredibly nuanced, and frankly, it's been going on for months now. But in short, there's an economic crisis in the country right now, and it's nearing on economic collapse. There is absolutely huge monumental inflation. The country appears to be incapable of importing food, fuel, or medicine, which is obviously going to cause a hell of a lot of turmoil amongst its populace. And so a bunch of protesters, thousands upon thousands of them, stormed the presidential residence yesterday. You can see this picture behind me here is a video of them swimming in the president's private pool. Now, there's a good chance at this point that this devolves into a full-on uprising and that the government that's currently in power loses control altogether. There's a decent chance this is where it will go, but frankly, I'm really not sure, and I don't think anyone is. Hopefully, this doesn't devolve into some kind of a civil war. Sri Lanka has seen a civil war in the past, and it wasn't a good thing. Maybe this warrants a full video looking into the economic collapse, seeing why they got to this situation now, and if there's a way out. Please let me know in the comments if that is interesting, because I'm not actually sure if you will all be interested by that. It's a little bit detached from the Western point of view that we usually provide here. Finally, then for the day, we have a huge piece of news coming out from Elon Musk regarding his purchase of Twitter. And in short, it appears to be dead in the water. There is, again, loads to talk about here, and we're going to cover it just very quickly in this video. And then I'll be putting out a full video explaining everything going on and going deep into the facts and what we know and what we don't know that will be out later today. Now, in short, what happened? Well, Elon Musk put out a regulatory filing basically saying that he's giving up on his purchase, citing Twitter's false and misleading statements. Now, this is regarding false accounts that Twitter claimed were real accounts and that they came out and announced they weren't after Elon had already made his offer. This tweet here from Brett Taylor, who is a member of the board of Twitter, makes it pretty clear the direction that they're going to take it in. The Twitter board is committed to closing the transaction on the price and terms agreed upon with Mr. Musk and plans to pursue legal action to enforce the merger agreement. We are confident we will prevail in the Delaware Court of Chancery. Basically, they're suing Elon to try and get him to buy Twitter under the terms that they agreed. There are loads of possibilities of what could actually end up happening here. There are loads of possibilities of what Elon intended to happen in the first place. There's the possibility that Elon never actually wanted to buy Twitter. There's the idea that maybe he used it as an excuse to sell Tesla shares at the top. There's the idea that actually he is justifiably and genuinely angry at the fake fraudulent data put out by Twitter over the last few years. And there's the idea that the monetary environment has changed, that his wealth has dropped dramatically with Tesla shares almost halving in value. And so maybe he just can't afford it anymore. Again, there's so much here to talk about, so I'll cover it all in a video that comes out later today. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.